My first target was 20,000. I made a commitment to myself to not buy until we at least pierced it. But at the same time, no trader knows the future. No trader is always going to be right 100% of the time. I certainly am not. So what I understand is that historically, if I slowly accumulate, overall I gain exposure if it doesn't get down to, let's say, 12,000. But also by dollar cost averaging in, if it does go there, then maybe my average is around 15,000.
Hello and welcome to Wealthy Value. In today's video, President, CEOs, and Chief Market Strategist for InTheMoneyStocks.com Gareth Soloway updates about Bitcoin's current market standing, its upcoming price target, and major catalysts for market bottoming, and how far we are from it. Gareth Soloway also explains the best strategy to buy Bitcoin in a bear market, and why he considers himself a long-term Bitcoin bull. Make sure to stick around till the end of this video where Gareth reveals the next downside target for Bitcoin, chances of a depression-type scenario by the end of this decade, and why the collapse of the economy is inevitable. Before we start, make sure to secure your crypto trading from hackers and malwares by using a VPN. A VPN, or virtual private network, allows you to browse safely and anonymously by encrypting your internet traffic and defending you against online snooping, hackers, and governments. We recommend our friends at Atlas VPN, who are offering our viewers an exclusive 82% discount via the link in the description. A VPN is an essential tool for a crypto trader. Without a VPN, your original IP address is traceable and can reveal your city, zip, and area codes. Atlas VPN protects your privacy by hiding your real IP address, so the crypto websites you visit and your activities there can't be traced back to you. It can also help you overcome geoblocks and access crypto websites otherwise unavailable to users in your region. Click the link in the description to secure an 82% discount for a limited time.
I think for a bottom, at least in the overall stock market, right? And we could talk about crypto. This is going to apply to crypto. It kind of applies to everything. Is that you go through those stages of grief, right? And it's very applicable. So initially there's denial, and then you finally go down until you get to acceptance. And when you get to acceptance, that's when the bottom will be put in. And again, we're not there yet. Not on the stock market, unfortunately, not in crypto, although I do think crypto is closer to that than the stock market in terms of how much decline we've seen in Bitcoin and other altcoins. So I do think we're getting there, but it's not quite there yet. You will know when there's like, you hear blood in the streets. That will be the case. Not literal blood in the streets, but it's more like everyone is just so upset and so frustrated with the markets and basically throws their hands up in the air and says, I don't even want to look at the stock market anymore. That's when you put in a bottom. Let's take a look at the chart here on Bitcoin and see what we have. So right now, we're still hovering around that 2017 high. That was my original call, as you know, that we would that was at least my minimum target. We have achieved that on Bitcoin. So my guess is near term. And when I say near term, I'm talking the next 2 to 4 weeks. I think you probably see a bounce in Bitcoin at minimum back to 25,500, maybe as high as resistance here around 28.5. But I do still think there's more downside. One of the key factors that's bothered me about the crypto markets is that it's so representative and identical to the .coms. And you haven't seen that flush out. Amazon went from $112 down to $6 back then. That's a 95% decline. I'm not sure if Bitcoin will drop that much, but I think you got to at least do your 80 to 85% that a normal bear cycle in Bitcoin does. And you also have to wipe out more coins. All right, there are way too many. There's still like tens of thousands of coins out there, even after Terra Luna kind of blew up. We've seen Celsius, which, again, that's had a lot of problems. That's the beginning stages of what the .com bubble went through to bottom, but you have to see more of that. It's usually technicals. That's how I come up with these targets. So number one, if we look at the chart here, we can clearly see that after the 2017 high, and by the way, one of the things that makes me think the 2017 high is not the bottom is that almost everyone is saying it's the bottom, right? I mean, as we got closer, I was calling the 20,000 correction back when we were 60, 68,000. But then as we got to like 30, I started seeing it everywhere. Oh, we're going to 2017 highs. This is where we're going to bottom out. This will be the greatest buying opportunity. When everyone's saying something, it almost is never the case, right? So that alone is making me think it's going lower. And then we can look at this area here, right? There's just a ton of major support between 13 and 12,000. So that's part of it. And then let me show you this. This is a really cool tactic in technical analysis. It's called a measured move. So if we take this high to this low, which was basically a straight fall down, We then had this consolidation, right? So you had about 3 months of a parallel consolidation. And then basically from this high, if you take the same distance as that first move and we drop it down, you basically get 12,000. So this distance with this distance is identical. And that gives me also a calculated target to 12 to 13,000. Now, it doesn't guarantee Bitcoin will stop there, but it gives me a good multi-factor analysis technique to think that that could be a level where it has a chance to fully bottom out. You know, my first target was 20,000. I made a commitment to myself to not buy until we at least pierced it. But at the same time, no trader knows the future. No trader is always going to be right 100% of the time. I certainly am not. So what I understand is that historically, if I slowly accumulate, overall, I gain exposure if it doesn't get down to, let's say, 12,000, but also by dollar cost averaging in, if it does go there, then maybe my average is around 15,000. And when it runs back to 60 to 65 or 70 or 100, I'm in a great position at that point. So it's a way to kind of understand and be humble enough. And God knows I've been humbled by the market so many times in my career. It's to understand that you're never going to be always right. So why even mess with it? Why even say, oh, well, I'll only buy at 12,000. Let me start at 19,000, 1/6 position. Every 2 to 3,000, I'll buy another 1/6. That even allows for me to buy below 12, that into the sub 10,000 range. And that's what I want to do. I'm not trying to pick an exact bottom. I'm just trying to put myself in a longer term position for big gains when we do get the turnaround. And that's so key. Is like in my early career, and I think this is something that all new investors and traders struggle with, is they always go into a trade saying, I'm going to be right here. This is a support level. So because I think I'm going to be right, I'm going to bet the farm, right? Or put my, full account in. And I've learned, unfortunately, many times in my earlier career is that that's how you take big losses. What you said is so important too, is that the thesis before the end of 2021, before the Fed started pulling back on their printing, it was don't fight the Fed, which was correct. But one of the things that we find out about human nature, and this is the psychology of an investor, is that once the thesis changes and goes against what you want to do, you kind of change your thinking. And you can't do that in trading, just like in life. You have to say, okay, well, the Fed is telling us they're pulling back on all this money printing. So really don't fight the Fed means get the heck out of the markets or go short the markets. But people are so conditioned to say, well, I just want to make money. So I'm going to say, well, it doesn't matter now what the Fed says. I'm going to just go along anyways, or I'm going to buy the dips anyways because it worked. But we really have to take the cues from what the Federal Reserve has said and abide by them. I think this is the key, is that number one, we have to see inflation come down. And so the fact that oil dropped, oil just like 2 weeks ago was north of $120 a barrel. I think it closed today right around or just sub 100. That, if that continues, number one, just that drop alone will bring down inflation a little bit in the near term. But I think at least for me, I'm expecting oil to come back to 85 to 75 by the midterm. So that is going to bring in inflation, which will take some pressure off the Federal Reserve from continually hiking rates. Now, the key is going to be this. If you're going to basically get a scale, right? So here's a scale. On one side, we have unemployment. On the other side, inflation. Now, right now, inflation's up here. Unemployment's way down here. Now, as we see inflation come down, but the economy start to get into recession, you're going to see unemployment rise. Once unemployment is above inflation, that's going to be the greater evil for the Federal Reserve. So they're going to have to attack that by lowering rates and printing money. And what that's going to do is then it's going to push unemployment down, but then inflation is going to rise, right? And so now they have to attack this one, and back and forth and back and forth. Ultimately, each one is going to go slowly higher and higher, though, which is the end game, unfortunately, for the system. So I think that we've already seen a slowing in the economy. We've seen signals that the housing market is starting to cool rapidly because the 30-year has jumped so much. Interest rates are up so much. And I think just the cooling of the economy is going to bring down oil, right? If you have less people driving, less people flying because they don't have as much money and the economy is getting slower, then inevitably it's going to bring down oil prices. It's going to bring down commodities as a whole, which we've already seen starting to collapse here. Massive drops in copper, massive drops in platinum, and we've also seen oil collapse here as well. So all of that is going to bring the CPI numbers down over the next few months. The Fed is probably going to claim victory, but they're going to prematurely do that, I think. And ultimately, we'll see the economy slipping more and more towards recession by end of year, early 2023. And then you're going to be in this position where the Fed has to say, okay, well, we can't let this recession turn into a depression. So now we need to start the printing presses up again and stimulate either by cutting rates or actually printing money directly.
So do you agree with Garrett's outlook for inflation and recession? Tell us in the comments. Also, don't forget to like and subscribe. See you soon with the next video. Thank you so much for watching.